He is one of the greatest investors ever.
United has called him America's number one money manager during the 13 years.
Not just a market genius, but also a teacher and the author of one of the most practical investing books. Our man in this video is a legend, on the same level as Warren Buffett. But what made him different? Today we go deep into Peter Lynch philosophy, how he started, what he believed, what he thought others to do, and how he filtered great stocks from the noise. Step by step, we will look at the mindset, the key indicator he followed, and the big idea that shaped his career, that everyone, not just Wall Street, can invest successfully if they follow the right approach. Let me tell you something that Peter Lynch once said at the Cuddy Club. I heard people talk more about stocks than about salary. That was sentence it say everything. You see, before he managed billion, before Wall Street knew his name, he was just a kid, a quiet boy from Newtown. His dad died when he was 10, and Peter, he worked at the local golf course, but even then he was just going back. He was just listening, watching, learning. He didn't care about tips. He cared about the talk, and it was always about stocks. Now, pause for a second. Why does this matter to you? Understanding Peter Lynch beginning help you see why he succeed. He doesn't start on Wall Street. He didn't grow up rich. He grew up aware, curious, hungry to know. Now let's zoom out and go back to the 70s. Where hell for investor, stagflation, oil shock, employment through the roof. Economists were guessing, and most investors they hide in giant blue chip company, trusting complicated model that no one really understands. Wall Street was lost. Then comes Peter, not with a fancy degree, not with a silver spoon, just raw focus. He gets a shot at Fidelity, the same company where those rich golfers worked first, as an intern, then full time. But it wasn't some warm welcome. It was a pressure place filled with tough. Instead of mimicking them, he plays it differently. He listened more than he talked. He did everything. He studied trend, businesses, people. He connected dots they didn't even notice. And quietly, something started to shift. This wasn't a luck. This was a beginner of something big. You know what made Peter different? He made investing feel human. While everyone else tried to act like a rocket science, Peter just looked around. He paid attention to what people were buying, what they were shopping, what they were talking about. One time his wife told him about this new Penteos brand being sold in the grocery store called Legs. Peter didn't laugh. He looked into it, saw the number, researched the company. He invested. The stock exploded 7 times. Same thing with members. He was a dad. He saw what parent needed or Dunkin' Donuts. He literally went there for coffee. One aspect of his strategy, use your eyes, listen to people, use your life. He believed in this. Know what you own and know why you own it. Peter didn't love a lot of complexity. He wanted clarity. He said, if you cannot explain it to 10 years old in 2 minutes, don't buy it.
If you can't explain it to a 10-year-old, 2 minutes or less, don't own it.
This is why it's work, because it's simple. He focused on fundamental, like how the business made money, how much debt it had, and whether the earning were growing. And he loved company with a big ratio and their one, meaning they were cheap company to how fast they are growing. He didn't sound smart. He tried to be smart. Peter didn't care a lot about looking good. He cared about funding good businesses. He tracked over 1,400 companies. He flew over the country, toured factories, talked to manager face to face. He said it was like drinking from a fire hose. Now let's talk on another aspect of his strategy. Peter didn't just feel his way through the investing. He had a clear system. In his book, One Up on Wall Street and Beating the Street, he laid it all out. He broke company into 6 categories. Slow growth, stable but small return. Stalwarts, big study company like Coca-Cola. Fast growth, small company with massive potential. Cycles, firm that rise and fall with the economic cycle. Turnaround, broken company that may bounce back. Asset player, company hiding valuable assets on their books. This helped him compare apple to apple and avoid judging fast growth startup the same way he judged utility stock. He also hated market timing. He studied investing for the long run. He said, for more money has been lost by people trying to avoid correction than in the correction themselves. He believed in what he called scuttlebutt, basically talking to customer, employees, managers, supplier, getting the full story. If he saw a new brand pumping everywhere, he paid attention. He said also the best stock to buy may be the one you already own. He trusts what he called see with his own eyes.
Follow the restaurant industry. People are in industries. They're in the publishing industry. They're in the chemical industry. Why don't they just stay within industry?
So, what's Peter Lynch's legacy? Well, he didn't just outperform the market, he changed how people thought about investing. His books sold millions of copies. He made investing feel possible for normal people, not just for Harvard degree or for hedge fund manager. He gave people a new lens. Use your own life as a research tool. Warren Buffett even said, Peter Lynch is a guy who gets he knows the way it works in the real world. That's a huge compliment coming from Buffett. Other legends like Ray Dalio and Charlie Munger respect him too. Today, his style is everywhere. Retail investors just like you and me use it. But let's be real, my friend. Not everyone respects Peter Method. Wall Street, in their time, saw him as too retail, too basic, too emotional. People criticized him for skipping tech stocks. Others said his method was too local and he didn't see other country stocks. Some say his strategy it is too simple to work long term. At just 46 years old, when most people are trying to climb higher, Peter walked away. He retired. Not because he couldn't handle the market, but because he wanted to be present with his wife and kids.
Actually, I wanted to spend more time with my wife and my children. Right. It was
But for accuracy, Peter didn't finish. He just skipped back. From working 17 hours a week, he cuts it down to maybe 14 hours. Spent more time with his family. Imagine he calling working a 14-hour week a retirement. I leave you with one last quote from Peter Lynch. Everyone has the brain power to make money in stocks. Not everyone has the stomach. His success wasn't magic, it was discipline, logic. He trusted what he saw. He studied curious, and most of all, he never stopped learning. And you know what? You can do the same. You don't need a PhD. Just open your eyes, ask questions, do the work, and stay constant. That's the real Peter Lynch method. Now, tell me which part of his strategy spoke to you the most.